Hello viewers, welcome back to my channel. I am Neha Paryani. So in today's session we are going to discuss about another problem in case of dissolution of a partnership firm. Okay, we have already discussed its concept about realization account, its format. We have also done certain problems till our previous sessions. Okay, if you want to watch the previous videos, you can get their link in the description box below or also at the end of the video. You can even check it on channel's playlists. Okay, yes, so today let's start with second problem on dissolution of partnership firm. Okay, so the problem today is, in this problem we are also having to prepare partners loan account. Okay, in the previous problem we did not had to prepare that. Okay, so this question is quite different from the previous one. Now the question is, Rose and Lily shared profits in the ratio of 2 is to 3. Okay. Then their balance sheet on March 31, 2006 was as follows. So a balance sheet is given in the question. Then they are telling Rose and Lily decided to dissolve the firm on the above date. Okay, partners are going to shut down their business activities. Then assets except bills receivable realized at rupees 4,84,000. Okay, bills receivable was taken over by Rose at rupees 33,000. Right, it's easy. Then creditors agreed to take rupees 38,000. Okay, so there are creditors or liabilities, so that settlement amount is given. Then cost of realization was rupees 2,400. So here cost of realization, it's nothing but realization expenses. Okay, then there was a motorcycle in the firm which was bought out of firm's money, was not shown in the books of accounts. So it means in the balance sheet they have forgot to show motorcycle. Okay, so there is an unrecorded asset given in this question, right? Then next, it was now sold for rupees 10,000. So it's been realized or it's been sold now, so we have to take it in realization account, but it was not mentioned in the balance sheet of the firm. Then there was a contingent liability in respect of outstanding electricity bill of rupees 5,000. Again, there is an unrecorded liability here. We have an outstanding bill which is to be paid. Okay, so all this information is given. Then they have asked us to show realization account, partners capital account, loan account, and cash account. So basically, usually we prepare three accounts, right? But in this question, we are asked to prepare four different accounts. Okay, so let us see how to do that. First, we will start with realization account. So this is the format of a realization account, and we know that the first step in realization account is to mention the book value of assets and liabilities. Okay, so on the debit side, let's mention as assets account their book value. Okay, so let us see what all the assets given in the balance sheet. Okay, so we have to remember that we cannot take cash or bank amount. Okay, other than cash or bank amount, we should take all other assets. Okay, so leave cash. Then we have debtors, inventory, bills receivable, and building. So all these four assets book value has to be recorded. Okay, so let's record it. Debtors, we have 80,000 rupees. In that, PDD is deducted, but in asset side, in while recording the book value of assets, we will record its full value. Okay, so debtors rupees 80,000. Then next asset that is given in the question is inventory. Check the value of inventory, 1,09,600. Okay, mention the same value here, 1,09,600. Then next asset given in the question is bills receivable, 40,000, and buildings, 2,80,000. So we can mention it as bills receivable rupees 40,000 and buildings rupees 2,80,000. Now when we total all these assets, we get the value as rupees 5,09,600. Okay, so our firm has assets worth rupees 5,09,600. Now again in the first step itself, so what will be our next step? So that is recording the book value of liabilities. Liabilities account on the credit side, their book value. Okay, so while recording the book value, so we have to refer the balance sheet given in the question. Now we should remember that three things should not be taken. Okay, three things should not be taken while recording the book value of assets. Now which are those three things? So first of all is capital of partners. Okay, after that, if there are any undistributed profits or losses like reserve fund, general reserve, okay, or if we have profit and loss account, then after that the third thing is partners loan should not be recorded. Partners loan should not be recorded as the book value. Okay, so for that we will prepare a separate account here. Okay, now refer the balance sheet. What all the liabilities we have? First we have creditors. Yes, we should take it, rupees 40,000. Creditors, rupees 40,000. Then back to question. Now we have Lily's loan. Yes. Now check in question. Lily is one of our partner. Okay. So Lily's loan is given. So as I already told you, three things should not be taken. So one is capital, undistributed profits or losses, and the third thing was partner's loan. Okay. If partner's loan is given in the question, we will not take it in realization account to show its book value, but we will prepare a separate loan account for the partner. Okay, so here I'm not taking it. In case instead of partner it was given as Lily's, suppose sister's loan. Okay, even though she is Lily's sister, but she is not the partner of our firm. In that case we would have taken Lily's sister's loan in the realization account in liabilities book value. Clear? Only partner's loan should be excluded. Any other third party's loan should be taken. It could be partner's wife, partner's husband, their children. It could be any of their relative friends. Okay, all of those are treated as third party to the firm. Only partner's loan cannot be taken here. Partner is the insider. Okay, then next thing is profit and loss account. So as I already told you, this is an undistributed profit or loss. Okay, if the profit and loss account is given on the liability side, it is profit. Okay, it is not loss, it is undistributed profit. Okay, so we will not take it here in the liabilities book value. Then next thing given is capitals. Okay, capitals is given. So again I told you partners capitals will not be taken in liabilities book value. Okay, now everything from liability side is done. Okay, but we have another one thing here, this PDD. So while recording debtors we have taken the full value of debtors, rupees 80,000. Okay, but we have not taken the PDD amount, provision for doubtful debts amount. That I will take it here. PDD rupees 3,600. If you don't wish to take it on the liability side in the book value, then you can directly deduct here PDD from debtors, and here you cannot take the full value then 80,000. Okay, you should take the value 76,400. The choice is yours. You want to deduct it in the asset itself, or you want to show it separately in the liabilities. Okay, it's left to you, but it's correct if you show it separately. Clear? Yes. Now the first step is done. Total these three, the total of liabilities will be rupees 43,600, right? Now the next step is to record whatever the assets have been realized and whatever the liabilities have been paid off. Okay, now we have to start referring to the additional information. Okay, Rose and Lily decided to dissolve the firm. Yes, we know this. That is why we are preparing realization account. Then assets except bills receivable. Okay, accept this 40,000 rupees bills receivable were realized for rupees 4,84,000. So how we will take it? We will take it as cash account, in bracket assets realized for rupees 4,84,000. Okay, now see here, we have shown the book value of assets on the debit side. It means we have shown that we had all these assets in the firm. Okay, when they are realized or sold, I will take it on the opposite side, right? I will take it on the credit side. Okay, and if they are sold to any others, it's taken as cash account. If any of the asset is taken over by the partner, we will show it as partner's capital account. Clear? So here nothing is mentioned for whom the assets have been sold. So that is why we are taking it as cash account. Okay. Then bills receivable were taken over by Rose at rupees 33,000. Now Rose is one of our partner, right? Any of our partner is taking over some of the asset. So again in the credit side, we will take it as Rose capital account. Okay, and she is taking over bills receivable. So bills receivable taken over at rupees 33,000. Okay, then back to question. Now creditors agreed to take rupees 38,000. So we have creditors as our liabilities. So we are paying off our liabilities. 40,000 rupees we had to pay, but creditors are agreeing only to accept 38,000 rupees. So liabilities book value have been shown in the credit side. So when they are paid off, we will show it in the opposite side as cash account, liabilities paid. Okay, so creditors are paid. Creditors are paid rupees 38,000. Clear? Back to question. Then cost of realization was rupees 2,400. So we know it's nothing but realization expense. So expenses are recorded on the debit side. We will record it as again cash account in bracket realization expenses. How much? Rupees 2,400. Clear? Back to question. Then there was a motorcycle in the firm which was bought out of firm's money, was not shown in the books of the firm. It was now sold for rupees 10,000. So as I already told you, there is a motorcycle which was unrecorded in the books of accounts, but now we are selling it for rupees 10,000. So basically I am receiving cash for selling it. So again I'll take it as cash account for motorcycle sold. Okay, rupees 10,000. This is an unrecorded asset which was realized, so I'm taking it in the credit side. Okay, then back to question. There was a contingent liability in respect of outstanding electricity bill of rupees 5,000. Again there is an unrecorded liability here which is outstanding electricity bill. Okay, so we will take it on the debit side, right? So I'll take it as cash account. Okay, outstanding electricity bill. What is the amount given in the question? Rupees 5,000. Okay, so 5,000 rupees. Now everything in the question is taken, right? Everything is completed. Now we just have to total both the amount columns and see which side is bigger. Okay, so if we total both the amount columns, credit side is bigger here, rupees 5,70,600 is the total of credit side. 5,70,600. Write it same on the debit side as well. Now the balancing figure or the difference amount here is rupees 15,600. Okay, so difference amount is on the debit side. It's treated as profit on realization and it will be transferred to partners capital account, right? So who are the partners? Rose and Lily. Okay, this profit should be distributed according to the ratio, that is 2:3. Okay, so how we will do it? Total profits are rupees 15,600 into 2 divided by 5. 2 plus 3 is 5, right? So if profits are divided in 5 parts, 2 parts belongs to Rose and Lily. Total profits are 15,600 into 3 by 5. 3 parts out of 5 belongs to Lily. So when we will simplify this, we'll get the value 6,240 and 9,360. Okay, so this is how we prepare realization account. So if in simple words I have to say, first step will be to record the book value of assets and liabilities. Okay, second step will be to see what all assets have been realized, take it on the opposite side. If any of the asset is taken over by the partner, mention it as partner's capital account. Okay, then next step will be to check whatever liabilities have been paid. Okay, take it on the debit side, again opposite side, right? Other than that, if there are any realization expenses, just record it, right? At last, if there are any unrecorded assets or liabilities given in the question, okay, just take them on the opposite side of their book value. That's it. Okay, more than this nothing else will be asked from dissolution chapter in realization account. Okay, then at last you have to total both the amount columns, check which side is bigger. Okay, if you are getting difference on the debit side, it's treated as profit on realization. If you are getting difference on the credit side, it's treated as loss on realization. In both the cases, be it profit or loss, we have to distribute it among partners in their ratio. Okay, that's all we do in realization account. Clear? Now the next step is to prepare partners capital account. Okay, we know partners capital account always starts with the balance brought down. That's nothing but the capital of the partners. Okay, now refer the question, check what capitals of partners have been given. Lily 1,60,000 and Rose 2,40,000. Okay, so for Rose it's 2,40,000 and for Lily it's 1,60,000. Clear? Yes. So after this, we usually take goodwill, right? But goodwill is not appearing in dissolution chapter. Okay, so just leave it, right? Third thing will be to take profit or loss on realization. Okay, in this question we have profit, right? We have profit in the realization account which was distributed or transferred to partners capital account, right? This has to be recorded now. So in the credit side, this is the debit side and this is the credit side. Okay, so in the credit side, so we will take it as realization account, in bracket profit on realization. Okay, amount has been already distributed, 6,240 for Rose and 9,360 for Lily. Okay, same you should take it here, and 9,360. Clear? Now next step is to refer balance sheet. Okay, whatever items were not taken, right, like undistributed profits or losses, now should be taken in the partners capital account, right? So in the liability side, we have one undistributed profit or loss, that is, I told you, P&L account on the liability side means it's profit. Okay, so this has to be distributed among partners now. Instead of P&L account, they might sometimes ask you general reserve or reserve fund, employees compensation fund, okay, amounts like that, right? So 50,000 has to be distributed in the ratio of 2:3. So again, if it is profit, so I will write it as P&L account share of profit. Okay, what is the amount? 50,000 rupees was the amount. So if we divide it in 2:3 ratio, we will get the value as 20,000 and 30,000. Here, if there was loss, it means if profit and loss account was given in asset side, then it is a loss. Okay, it is a loss, it's not the profit. Then we would have taken in the credit, so debit side in partners capital account. Remember, losses are written or losses are transferred in the debit side, profits are transferred in the credit side. Clear? Then back to question. Now check if there are any assets taken over by the partners or if there are any liabilities paid by the partner. Okay, in this question we have one asset taken over by partner, that is Rose. Okay, Rose has taken over bills receivable, right? So that, see, we have in the realization account we have recorded on the credit side. Now in partners capital account we will record it on the debit side as realization account in bracket Rose taken over bills receivable. Okay, so she has taken over bills receivable for rupees 33,000, right? Yes. Next, other than this, any of the partner has not taken over any asset. Okay, neither any of the partner has paid for any liability. Okay, so everything is done relating to partners capital account. Okay, so we just have to total again. Credit side is bigger. Total of Rose amount column is rupees 2,66,240, and total of Lily's column is rupees 1,99,360. Here same thing, 2,66,240 and 1,99,360. Okay, now the difference amount is on the debit side. Okay, that is rupees 2,33,240 for Rose, and same for Lily, 1,99,360. Okay, now the difference amount here is transferred to cash account. Okay, we can write it as it's the balancing figure. Okay, this will be transferred to cash account. This is the new capital of the partners. Okay, or you can say the remaining capital of the partners. Okay, so basically what we did in partners capital account, first of all we started with capital, right? Then after that you should check for goodwill, but in dissolution chapter there will be no goodwill. Okay, then third thing is to check whether we have realization profit or loss. Okay, if loss is given, take it on the debit side. If profit is given, take it on the credit side. Clear? After this you should directly go to question. Okay, check the balance sheet. If there are any undistributed profits or losses, you have to distribute here to the partners. Okay, in this question profit and loss account was given, right, on the liability side, which is profit, so we have distributed it. Okay, after that you have to check whether any of the partner has taken over any asset. If yes, mention it on the debit side. If any of the partner has taken over or paid any liability, mention it on the credit side. Clear? So then just total both the amount columns and check whatever the balancing figure we are getting here. Okay, so that balancing figure or the balance carried down difference amount will be transferred to cash account. Okay, so this is what we have done in partners capital account. Okay, next thing is to prepare loan account, right? So see, in this question partners loan is given. One of the partners loan is given, that is Lily's loan. Okay, so in question sometimes they might ask you to prepare loan account and sometimes they might not ask you to prepare loan account, right? If you're not preparing loan account separately, right, then this loan amount should be taken in cash account. You should not forget to take it in cash account. Clear? If you're preparing loan account, then it will be easy, you will definitely remember. Okay, now how to prepare loan account? It's very simple, right? Loan account amount of loan rupees 32,000 is given. So in the loan account, so take it as balance brought down on the credit side. Okay, so rupees 32,000 and that's it. Yes, that's it. You don't have to do anything more, just to take the amount of loan which is given, right? Loan is the liability for the firm, we know, right? Loan is the liability. For every liability account, the opening balance will be on the credit side. Okay, loan is the liability, so the opening balance of the loan we should take it on the credit side. Okay, just close the account 32,000 and 32,000. Now this 32,000 rupees will be on the debit side. the balancing figure or the difference will be on the debit side. Okay, so again I will transfer it to cash account. This is the balancing figure. Okay, just to transfer this loan amount to cash account, we prepare loan account in case of dissolution. Okay, right? But as I already told you, they might ask you to prepare it separately or they may not. Okay, if they have not asked you, you can do it by yourself. You can prepare it. Okay, there is no harm in preparing an extra account. Okay, in case you are not preparing loan account, then that loan amount directly you have to take it in cash account. But sometimes many people forget to take it, so their cash account will not tally. Okay, so that is the reason we are preparing this loan account. At last, we have to prepare cash account, debit side and credit side. So if you have watched the previous sessions, you will be knowing. So cash account is just the cross posting. Okay, it's just the cross posting. How to prepare this account? So you have to refer all the previous accounts that you have prepared. Right, so to start referring from realization account. Okay, here wherever the word cash account is mentioned or whatever cash account transactions have been made, entries have been made, just tick them. Okay, put a star mark near them. Okay, on debit side we have 3 cash entries in realization account, and on credit side we have 2 cash entries in the realization account itself. Now all these cash entries should be taken into cash account, but on the opposite side. Okay, see, in the debit side in realization account we have cash account for liabilities paid. Okay, here it is on the debit side, so in the cash account I will take it on the credit side as realization account in bracket liabilities paid. Remember, you cannot take cash account again here. Okay, you are preparing cash account, so again you cannot write it as cash account here. That's totally wrong. You have to write it from which account you are taking the entry. Okay, currently we are referring realization account, right? So you should mention it as realization account, and the amount was rupees 38,000. Creditors paid, right? So one cash transaction is recorded. Next thing we have again cash account for realization expenses. This is again on the debit side in realization account. So in the cash account we will take it on credit side as again realization account for realization expenses. Okay, what is the amount given in the question? It's rupees 2,400. Right? Yes. Then next thing, so this is also done. Third, again we have cash account for outstanding electricity bill in the debit side. Again in the cash account it will be on the credit side as realization account for outstanding electricity bill. Okay, the amount is rupees 5,000. Right, back to realization account. All the entries from debit side of realization account are completed. Now check the credit side. In credit side we have 2 entries. One is cash account for assets realized, rupees 4,84,000, and another one is again for motorcycle sold or again motorcycle realized, rupees 10,000. Okay, so in the cash account now you should take it on the debit side as realization account for assets realized, rupees 4,84,000, right? And again realization account for motorcycle sold, rupees 10,000. Okay, both the entries from realization account credit side are done. Basically we have taken every cash entry from realization account. Next, refer partners capital account and check what all cash entries we have here. Okay, so on the debit side we have a single cash entry, that is the remaining capital of the partners. Okay, so I told you this should be transferred to cash account, right? Here in partners capital account, it is on the debit side. So in the cash account, we will take it on the credit side as partners capital account. Okay, Rose and Lily. So just mention their difference amount here. 2,33,240 and 1,99,360. Okay, so 2,33,240, 1,99,360. Okay, then yes, then this is also done. Every entry from partners capital account is completed. Okay, then we also have loan account in this question. So again we have one cash entry in the loan account. It's on the debit side again. Now this, if it is on the debit side in the loan account, we will take it as credit side in the cash account as loan account, or you can take Lily's loan account. So the amount was rupees 32,000. So mention here. Okay. All the accounts are done. We have taken all the cash entries from accounts, but there is another one entry which is given in the question, opening balance of cash. Okay, while preparing realization account, I told you in the asset side one thing should not be taken, that is opening balance of cash and bank. In this question, opening balance of bank is not given, opening balance of cash is given. Okay, we have not taken it anywhere. We should take it in the cash account, rupees 16,000. Right, now cash is my asset, right? Cash is my asset. We are preparing one of the asset account. So opening balance of cash will be on the debit side. I will take it as balance brought down rupees 16,000. Okay, so it's better if you take opening balance in the beginning itself. Before referring all the accounts, it's better if you take the opening balance. Okay, start the cash account with opening balance, then go on referring all the accounts. But do not forget to take opening balance of cash. It will be definitely given in the question. Sometimes they might also give opening balance of bank. Even that should be taken here. Right, now all the accounts have been referred, all cash entries have been taken. Now when you total the cash account, okay, sorry, I mean when you total both the amount columns from cash account, debit amount column and credit amount column, the total must be same. Our cash account must tally. Okay, so in this case, if you total both the amount columns, it's 5,10,000 rupees. Okay, you should be very careful with two items here. On the debit side, opening balance, and if partner's loan is given, it should be taken on the credit side. Many a times, many students forget to take both of these entries. So that is why the cash account will not tally. Okay, and they will keep checking the answer, the solution again and again, but they don't find any mistake. Okay, so these two things you have to be very careful with. Right, so this is how we solve full problem in case of dissolution of partner, when we also have to prepare partner's loan account. Clear? So if you find this helpful, please hit the like button. Also subscribe to the channel for more such videos. You can ask me any doubts in the comment section. You can share the video with your friends. Keep practicing. I will see you all in my next video. Till that, happy learning.